Peter Schiff must be pissed. Do you follow Peter Schiff?
He's the gold guy, right?
He's the gold guy.
Yeah.
Kind of based his crypto reputation on Bitcoin's going to zero. That's the biggest Ponzi scheme there is. Okay. You think Bitcoin's going to zero? Can't go to zero.
Not anytime soon.
And this must, I'm just saying the Bitcoin ETF must just piss him off because it legitimizes so much in his world.
Well, and you think about it, there's gold ETFs too, right?
Right.
They've never really been able to measurably increase the price of gold, or just availability went up.
Right.
But that's not a translation.
Yeah. And he has mining companies that mine gold. His bank went out, got regulated. They kicked it out or something. They shut him down. But they were probably after him for other reasons. I mean, not that he did anything bad. He said it was the most researched and regulated bank that's ever been out, for being legit. But anyway, it's just funny that the Bitcoin ETF must just piss him off because it legitimizes it in his world of those people, right? Because that's what the Bitcoin ETF is going to do. It's going to
It goes into the traditional finance world, and it brings crypto assets in. So that's got to be anybody who's anti-crypto hates that.
Exactly.
Right. The Charlie Mungers of the world,
right?
They would like it. We would go away
if we would just be gone.
Yeah, just go away.
Absolutely. So the ETF's been out here for a month and a half.
It came out on January 11th.
January 11th. It's a couple months almost.
Yep.
Yeah. So the history of ETFs go back to about 89, 1990.
So I show that the first ETF was 1993.
Okay.
And it was, its SPY is its ticker.
Okay.
And it was, and still is, an S&P 500 index ETF.
Who manages it? It's not BlackRock. It's Fidelity, I think it was.
I'm not sure who's managing it, but it's the first ETF that ever was, and it still exists today.
Yeah.
And it's the largest ETF today.
Mm-hmm.
People like the index type of thing, and index funds and index ETFs have different financial implications and cost drivers. So it's actually easier and cheaper to run an ETF or to be part of an ETF than it is to be part of a fund.
And mutual funds, those have kind of gone away. That's a big other difference between ETFs. There's big differences between ETFs and mutual funds.
That's true. And typically the structuring costs and the management costs are higher in the mutual funds.
Right.
And they are more front loaded than like an ETF.
Right.
ETFs also trade nearly instantaneously while the market is open.
Yep.
So if you want to buy or sell shares in an ETF, that happens relatively quickly. Whereas if you're buying or selling in a mutual fund, your shares don't immediately trade.
No, they can trade at the end of the day.
They stack them up, figure them out, and then they do the swap overnight.
Plus on mutual funds, you can't do things like shorts. You can't do any of those other more exotic transactions that you want to do on stocks. You can do that on ETFs.
Right.
That's a big deal too.
Yeah, no.
You can trade them daily. You can do those.
They're a more advanced instrument for finances. I'm not a finance guy. This is not my bag, but the way I understand it is that ETFs come with a lower barrier to entry, a lower cost to hold it, and an ability to take an index or a measure against a commodity or an industry segment. So some of the ETFs that are out there are very, very specific. They might be only railroad. They might only be certain kind of fruits, even. But their scope is to be part of that whole market. So if it was just strawberries, it's every strawberry maker, and they got a piece of everybody in that market.
It's not one stock of strawberries in an ETF, right? It's a basket of strawberries.
Yes, in general, that's true. Now, something like a gold ETF is a single asset ETF,
right?
But in the charter for those, typically they're not limited to being only that. That's something that's different with these BTC ETFs. They're actually specified to be Bitcoin only.
A single asset ETF. So you won't see the Bitcoin ETF bringing in Ethereum into it. They're not going to go buy Ethereum. They can't.
They're not allowed. Yeah. The SEC, when they chartered them, they told them, this is what you're allowed to hold in this ETF.
Okay.
And it doesn't work like that in all of them, but it's a measure of control against crypto is really what's going on there.
Okay.
They're trying to keep it from, now we're going to put some Chainlink in here. We're going to put some Solana in here.
Right.
No. We didn't say you could do that.
Right.
So they're specifically saying you can't do that.
So maybe later we'll see more of crypto ETFs that have a basket. But right now, the Bitcoin ETF will never be anything other than Bitcoin.
Yes.
Right now.
Yeah. So, I mean, they might apply later to change it, kind of like Grayscale trying to change from a future to a spot ETF, right? This is they evolve just like a business would evolve.
Right. Yep.
And I can see where it would change to be a broader crypto basket if you were looking for, say, blue chip, maybe the top 5 coins that aren't stable coins, something like this, where it's like, okay, I'm going to index that and use that as my measure of crypto. But in the future, what you're going to find is there are going to be a lot more regulations around crypto, and there'll be regulatory clarity. And this is what's keeping a whole bunch of people out. It's not knowing whether or not this or that is a security, or the risk associated with being attacked by the SEC because this crypto that your friend said was going to go 10x and you bought some and now it's gone half an X because the SEC and Gary Gensler went, no.
Right.
And all of a sudden there's FUD around your project that you thought was going to do really well. And so as we get more regulatory clarity, they'll bring more money. People will be willing to invest when they recognize where the rails are, where the boundaries are, and what's possible.
And not just people, bigger funds. Hedge funds can now invest in Bitcoin where they couldn't have before. Well, it's legitimate. They can do it now.
Yeah. So I think this is probably one of the biggest deals that is not really well understood about this new Bitcoin ETFs. I mean, we have essentially a dozen players who are now able to provide exposure to the traditional finance market to a crypto asset, the premier crypto asset, I would argue. Okay. And so what you're going to find is that more and more people are going to say, well, I've heard about Bitcoin. Bitcoin did pretty good. It was doing really good. What's its worth now? How much does it cost now? And, maybe I should have some of that. It's going to go up, right? There's this bull market mindset going on in crypto right now where it's growing and asset value is rising and interest is rising.
Sure.
But what hasn't been until January 11th was exposure to the asset for traditional markets. When you start looking at the size of markets, it starts to make more sense. So if you think about in the US, there's a little under $50 trillion in assets being on this exchange and this kind of thing. Right. So, maybe it's 45 trillion or something, but it's something a little under 50 trillion. Okay. So if you were to say, I have all these different markets and I'm trying to index a broad range of the world so that I have a risk reduction, because if this goes up, that goes down and this kind of thing. Well, one of those things that you're going to want is you're going to want something that's counter to some of your other plays. And Bitcoin is one of those counters. It's a high risk, high reward, quote unquote, in a lot of eyes.
Right.
So there's value in having a bit of those kind of volatility stocks and things in your fund, to bring up your performance potentially. Well, what does that look like? It looks like a small percentage, right? So if you're investing your retirement money, you're not going to say, "Whoa, put 50% in that high risk stuff."
Right. No, it's going to be little.
It's really small, right? But so what's small? Well, that kind of depends on where financial planners and fund managers decide that risk level is. And that's starting to come out with an idea that it's something like 1% to 2% right now.
Okay.
Now, 1%, if we just went conservative and said 1% of 50 trillion is a half a trillion.
Right. And how big is Bitcoin right now?
Bitcoin right now is 1.0001 trillion.
Right.
So just over a trillion.
Okay.
So that's like 50% of the Bitcoin money wants to get into an asset class where the only exposure you can get is Bitcoin.
Right. Right now. But
So yeah, but sure. But if you think about that, okay, but are they interested? Is that something that, fund managers and retirement funds are interested in this exposure? Apparently they are, because the inflows have been the highest and sustained inflows that any ETF has ever seen this early in its life.
Right.
Most ETFs, they start really slow. They create this new thing, this new basket. SPY created this new S&P index fund.
Right.
Well, everybody doesn't just go rush into the fund. They want to see how it's going to perform and whatnot. But the first day that Bitcoin was able to be purchased through this or held, not purchased, but held, or exposure to it held in a fund, that started with millions of dollars coming in. And that has been going on since day one.
Right.
So currently the average between January 11th and February 23rd is almost 200 million. It's 183 plus million dollars inflow per day.
Well, before we get to the inflows, let's go back a little bit.
Okay.
So the Bitcoin ETF, where's it being held and is it safe? So it's being held on Coinbase.
So you're talking about the custody.
Yes.
Okay.
Yes.
Yeah. So all of the new ETFs for Bitcoin have Coinbase as their custodian. And Coinbase has a requirement to store that in cold storage. So you're talking about air gap, cold wallet.
No one's stealing the keys of Coinbase and pulling, no one's grabbing that.
Coinbase has a lot more than their assets on the line. So they have a pretty rigorous custody process.
Okay.
And their process meets the requirements of the SEC because all of the applicants had to eventually change to Coinbase to get their applications accepted.
Right.
This was part of the process where they kept going back and forth to the SEC and having meetings. You know, BlackRock was showing up and VanEck was showing up, and they're talking about what's wrong with my application. Well, I'm going to go revise it and get back to you. They went back and forth, and one of those things that came out was you need to have this custodian, and the custodian needs to be trusted, and the only trusted custodian here is Coinbase, and that's because they're publicly traded in the US.
Which they're in huge profit right now. It's probably because of this.
It's going to continue for some time to come.
So let's say I want to let's say Bitcoin's at 51,000 and I want to invest $51,000, the amount of one Bitcoin into the BlackRock ETF.
Okay.
Do they then have to go buy that amount of Bitcoin? So there's no paper that's not fake. I mean, they have to custodian the same amount.
This is not futures. You're not betting on the movement of the item. That means you have to hold the item. Okay. So they have a custody requirement, and that's part of their thing as an ETF. So ETFs have a change in their leveling because the indices change.
Okay.
So if Apple goes up a lot or something else in your market or people start selling off, say Apple, and it becomes less of that top index that you're managing.
Mm-hmm.
Well, now you have to reduce or change your asset balance to match. And you're also looking at it as maybe that's an underperformer because it fell or something. And then you're going to want to offset it. Okay. So there's work that goes on there, but that has to be managed on a very short delay, right? Because the faster the market moves, the more that the fund could be liable for losses because the value of the asset went up between the time that you paid for it and they bought it.
Sure.
So they're going to try and cover that difference relatively quickly.
There's another difference between mutual funds and ETFs. If your mutual fund is in profit, you have to pay capital gains when it goes there before they sell the asset.
Yes.
In an ETF, you only pay it when you sell the actual share of ETF. If you have a gain from your share.
That's correct.
That's a big difference. That's a big deal too.
Yeah. So I think that's, again, I'm not really like heavy in the financial thing, but I think that has to do with the idea that you're holding a lot of different assets in the fund, as opposed to holding shares of the fund.
Yeah, and I'm not a mutual fund guy either.
Yeah, I don't know that part intimately, but I know that they're structured a little bit differently, and that's part of why when they sell, you're selling part of your assets, even though you don't want to. That's where you're getting this tax liability thing.
So when BlackRock goes to Coinbase to buy Bitcoin, are they buying? Where are they buying it? Over the counter? Are they buying it from miners? They're probably grabbing it wherever they can. I'm sure they're buying it directly from miners too.
So right now they're buying a lot. Right. They're buying hundreds of millions of dollars worth a day. And so the only way that they're going to be able to really sustain that is through over the counter trades.
Okay.
They really can't like suck all the liquidity out of the markets that are for retail trade.
Price will shoot up.
Price will just shoot up and it'll make it unattractive for them.
Mm-hmm.
So they need to find somebody who's willing to make an exchange that it's visible, but it's not price impinging. So if the price is 51.5, and we agree that we're going to swap at 51.3, and I don't care whether that moves up or down, we're not adding to or taking from that liquidity in any way at all. We're making a peer-to-peer swap, basically. This is kind of how an OTC desk is facilitating that and taking a little slice, right? Yep. So they have big players who are holders who want to hold less, and they have big players who are holders who want to hold more. They facilitate that. That creates a method for ownership transfer that doesn't dramatically affect the price for the average person. And they don't want the price to change dramatically because they're buying. They want the price to be what the price is.
Right.
They just want to get a lot of it. And so part of the reason they work over the counter is to not drive the prices up artificially, because all you're going to get is a big pump and it's going to fall back down.
Could they run out of OTC trades to be buying Bitcoin? Or they have to go directly to miners? Are they going to rob micro strategies?
Eventually, if they keep this up, they're going to strip the supply. And once they strip the supply of people who are willing to sell, then they're going to have to start stripping their liquidity out of the market. When they do that, the price is going to take off.
I wonder if BlackRock invests in miners. I wonder if that's part of their play. Because if they start owning mining operations for Bitcoin, because they're buying into mining operations.
Yeah, but they're buying lots of things. They're into real estate too.
Right. Oh, absolutely.
So it's not, there are many different markets for them, and mining is a different world than the ETF. So there's profit to be made there. Absolutely. There's crypto to be made there, but I don't know how that would play into their ownership or management of an ETF.
True. So if they run out of their OTC trades because they need to get more Bitcoin, then they start grabbing it from miners and start buying directly from miners. That's going to be on chain. We're going to see that, won't we?
That's probably where these OTC trades are coming from.
Who
has lots of Bitcoin?
So the halving is coming up, and they're going to have half.
They're going to have less,
to sell.
But see, quite a number of them have been stockpiling and waiting for the price to go back up too.
But they have fixed costs. They got to get rid of that to pay their costs.
Right. But if you think about it, they sell enough to get by, and they wait for the price, because the longer they wait, the more they likely the price is higher.
And they're seeing it. Absolutely.
So what you saw when the market really went crazy in the last bull, we got up over 50,000. Miners started transferring large amounts into the exchanges. Okay. And as it peaked up over 60, they started to sell.
Yeah.
Sell, because they knew that the price was really high.
Right.
And for them, they're looking for that. It's kind of out of the range at the upside to say, I need to dump some. And it was so obvious that it was like nearly every major mining organization in the world went to cash in.
Mm-hmm.
And that's part of why it went from 64 or something down pretty rapidly when the market turned.
So BlackRock's ETF might be putting a new floor on Bitcoin pricing, but miners having to sell as it goes up might put a ceiling on it. Is that going to create a range bound?
Well, so I don't think we're range bound at all. I think right now we're waffling in a rising range. So we're going like this in a range that's going up.
And that's because inflows, right? The inflows?
Because of the inflows, I look at it like this. What does it take to get the price higher? It takes more people in. And what are we getting? We're getting more people in a sustained way. Not people who hold wallets, not people that are buying PFPs on ETH or anything like that.
Mm-hmm.
We're getting people who just have money and say, I want exposure to this asset class. Right. Those people, they're not interested in ordinals. They're not interested in mining. They could care less. They're interested in balancing their portfolio and seeing that their risks and their rewards are at least equal to the average of the market.
So talking about inflows, I will put this chart that we're going to talk about on the screen for people to see.
This one up here. Okay.
Yeah, this one up here. So this zero line, which is going to be obviously right in the middle. What does this mean? Below that means
that's an outflow.
So below it means
sells.
Someone's selling. And then green is that's grayscale.
Yeah, that one's going to be grayscale.
BTC.
If you notice, all this one at the bottom that are all large, it's all grayscale.
Everyone's dumping out of grayscale, and we've heard that's probably because their fees are high.
Yep, their fees are higher.
Why not get out of grayscale and get into a cheaper fee system?
Yes.
Okay. So as we're going from the start, January 22nd, big outflows, but big inflows too.
Right. And if you see that they're almost balanced on the first day,
right?
But it starts to be that the inflows and the outflows, there's actually more inflow to balance out all that outflow.
Okay.
And so on average, it turns out that overall they've gained by over $5 billion.
And here by the end of January, which is very soon compared to when it started.
Yeah, a few weeks.
Those outflows are dropping way down. Now we're into February. It's way smaller. Middle of February, pretty small. Look at the inflows in February.
Yes.
February.
But what you're seeing though, is you're seeing the growth as people become exposed and aware. And there are millions of people who still haven't heard this news yet. They're not in the crypto world. They're not looking at Bitcoin or ETH or any of those. They're looking at portfolios, and then somebody's coming out of the blue and they're saying, hey, I can get you access to exposure to Bitcoin now if you're interested.
Right.
Oh, should I be interested? And now you're having the conversation about whether or not it's good for your portfolio.
Right.
And this is going to go on for months, if not years, where more and more people are going to be exposed, and the financial planner is going to have to sit there and make the case for why you should or shouldn't have it.
Right.
So a good number of those are going to say it's reasonable to have some risk.
Yep.
And so those people are going to be encouraged to put a little bit in their portfolio, and it's going to be as easy as buy me a few shares of that and I'm in.
So one of the cool things about Bitcoin is you sort of know who's buying what, right? If you know who wallets are. But look here, in the middle of February, we see big inflows. We can't tell who that is. So that could be individual investors saying to their financial planner, I want in, but it also could be hedge funds going in to BlackRock's ETF. And we don't know, right? We don't know who it is.
That's correct. We don't know who's investing in the individual funds because ETF shares are not transparent.
Right.
Ownership is not transparent.
So we don't know if that is because of retail people going into BlackRock, or if it's, for example, hedge funds finally having the chance to go into Bitcoin, which is a big deal now that they can drop in.
Yeah.
Because they can borrow the money from the government at 2%. They can invest in Bitcoin, and then they can borrow against that and still have exposure to Bitcoin.
But you know what you're seeing here is you're seeing the availability swing, right? If you notice, these inflows are kind of like this,
right?
And the price has been slowly raising, not dramatically raising, even though these are hundreds and hundreds of millions of dollars, right?
Right.
So what you're seeing is a lot of behind the scenes OTC trading is going on,
right?
And all of the availability from people who are really willing to sell is disappearing somewhere.
How much a day are we seeing going into here?
So average inflows between the 11th of January and the 23rd of February are in the order of $183, $184 million a day. A market day.
Right. Okay.
Not 7 days a week, but days the market is open.
Right. Okay.
Okay. There is an inflow average of almost $200 million.
How does that compare to the inflows into Bitcoin before the ETF? Do we know? I don't know that.
Yeah, that's not an answer I can come up with right away. I mean, I'm sure we could go look on chain, but it's more about transactions and like the velocity of the asset is part of what makes it useful as a network.
Mm-hmm.
And right now we have the highest network activity that we've ever had in Bitcoin. We're talking almost $25 billion a day in transfers. So exchanged between parties, $25 billion a day with less than $1 billion in liquidity. Think about that for a second.
Right.
That's very strange.
Right.
Yeah. No, when I first heard that, I was like, how does that work?
Well, yeah. Let's talk about, what is that?
Well,
$1 billion in liquidity.
Yeah. So what that means is, I could go to Coinbase and I could buy until they run out. And then I exercised all of their liquidity.
You as BlackRock, or you as the individual?
Anybody.
So I go on to Coinbase.
You go to Coinbase and you go, I want to buy $1 billion worth of Bitcoin.
I'm not buying it from you. I'm buying it from Coinbase.
You buy it from Coinbase,
and they're getting it from.
They have liquidity because they have a stockpile.
So they're holding
a certain
Bitcoin
amount,
right?
And they're holding that for the purpose of making transactions.
So I can get it quickly,
so that you can make an exchange. I want to get some off. I want to go buy some ordinals, or I want to go cash it in for something, right?
Yeah.
So this is where it starts to make sense that the price is appreciating, because we have huge amounts of transfer, but only a small amount of liquidity to do it in. So people are having to play a shell game of moving it around.
Yep.
This can't stay at a low price and have transaction volumes increase with liquidity continuing to fall.
Why is the liquidity so small in Bitcoin? Most Bitcoin is being held in outside of just in people's wallets.
Yeah, well, that's just
tied up.
Cold storage. Yeah, that's not available for transfer.
How much of Bitcoin is in cold storage? Do we know that?
So there are estimates. What you have to start looking at is the market cap and what's already been out there.
Mm-hmm.
There's over 19 million out there, but there's about 4 million that is considered untouchable or unreachable because either the keys are lost or the owner is dead or
so missing
like
Bitcoin that's never going to show up on the market.
Back. So that's like, I think it's 3.7 billion.
So that brings us down to, if there's 19 million Bitcoin out there, and there's 19 million Bitcoin out there, and there's 4 million Bitcoin missing, gone forever.
Right.
So that brings us down to 15 million that are actually available.
Yeah.
And of the 15 million, how much do we know how much is locked up in cold storage?
Well,
most of that.
What we can say is what there's liquidity. We can't necessarily say what's locked up because we don't know which part is lost and which part is hodled.
Right. We don't know.
Okay. We don't know. I mean, somebody could be hodling for 10 years and they just didn't pull it out and move it. And then one day they move it and everybody's going to freak out.
Oh, we thought that was lost.
That 10-year-old whale just moved the coins, right?
Right.
When it was 10,000 for a pizza. So, somebody gets a hold of that, they're going to be really happy. They're going to want to spend it.
But we do know of that 15 million Bitcoin, how much is liquid.
We know how much is on exchange.
On exchanges.
Available for you to go and do a swap. And it's about $500 million.
$500 million.
$500 million.
Dollars or Bitcoin itself?
It's
$500
million
worth of Bitcoin. Right.
Yeah. So if you think about that, $25 billion worth of transactions a day and only $500 million worth of liquidity.
Right.
That's significant.
It's going to suck it up pretty quickly. It's going to hoover that up in the prices.
The question is how much of it is actually leaving the pool? Because if I'm selling and you're buying, there's transactions for both of those. But if we're both on Coinbase and we both do it on Coinbase takes my money and gives it to you. It takes a fee, and the coin stays at Coinbase.
Right.
So it stays in the liquidity pool. It's still there.
If I haven't put it into cold storage.
Yeah.
For example.
Right. You just change. I want to put some in my account. You just do the swap. So that's a movement that shows the transaction and it shows that movement, but that money is still in the liquidity.
Right. Okay.
So it didn't necessarily leave.
Yes. That makes sense.
Because there was a change in ownership.
Okay.
But what we're seeing here is we're seeing all of the reserves are being drained away. All of the stuff that when the price gets higher, those other people that are thinking about selling, well, they already sold.
Mm-hmm.
They can't sell it twice. No double spend. Right. So, so what's going to happen is when they start fishing around for more liquidity and there isn't any, then the only liquidity you're going to find is by offering more. You start offering more, that's the price appreciation.
To get me to sell it because now it's at 60.
Like you bought it from me at 51.5. Right. It's been a month and a half and now it's 56.5. You have an opportunity to make almost 10% on your money.
Mm-hmm.
Now you're going to start thinking, maybe should I sell that or not? Or maybe it's going to go higher. Maybe I should hold on to it.
Right.
Well, as people start panicking and the price starts going up, who's selling? So the price is going to go a lot higher.
Mm-hmm.
And if these guys are still busy trying to buy to add to a portfolio so they can stick it in cold storage somewhere, they're just going to make the problem worse.
Right. And they're buying in big numbers.
Huge numbers.
Buying the big numbers.
So far, today's like the 24th. As of yesterday, Grayscale had dumped $7.34 billion worth of Bitcoin. Okay. But the inflow average is over 5 billion. That means the change is over 12 billion.
Mm-hmm.
That's huge.
Mm-hmm.
And they're running out. If you can see, they're running out, right? They're outflows. But you think about this as people really, because the ETF is draining because the fees are higher. And because
Trade scales.
Yes. And so their fees are driving people out, but they're not driving necessarily out of Bitcoin. So all of this negative is going back in.
Mm-hmm. It's just flipping it's flipping to the top of that line.
Essentially, this would just move up if they weren't selling. All of these would all just move up by that much. And instead of being a kind of a wash at the beginning, there would have been $1 billion a day going in.
And that's where you see the price difference. If this was moving up, just like you're saying, just above the line.
Yes.
That's where we'd see that price appreciation.
And we're seeing it. We're seeing it. January 11th, what was the price of Bitcoin? 30,000?
Is that what it was on January 11th?
30,000. Now it's 55,000.
Right.
It's been going up for a while. Right.
So 46. So 46,000.
So more than 10,000 up since the day that it opened.
And that's probably because,
well, it's not 10,000 anymore. It's 5,000. Right?
That was 51
something.
Yeah.
So up 5,000, but only up 5,000, which is like 10%,
almost 10%.
Right. in
10%.
2 months,
Right.
with sustained buying by people who are putting it away,
Yeah.
or stocking it away.
Yeah.
So the price is currently too low. This is one of the most under-recognized major sea changes in crypto. This is exposure to the market, to crypto.
Right. Legitimizing crypto.
It's tremendously hard to state how much this will change the game. It really is.
Okay.
Because what you're seeing is acceptance of crypto in the main traditional markets.
Right.
And any kind of crypto being accepted in the main markets is a sea change for crypto. Crypto's been the outside, it's been the redheaded stepchild, it's been the outcast of the financial world since its inception. And they've said for years that, hey, we're going to be something someday. We're going to take over the monetary system.
Yeah.
Well, in some ways, they've broken the monetary system. They're in it now.
Right.
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 So it has a place.
Yep.
It's not going to zero. It's people want it essentially for the reasons that are stated, right? It's a store of value. It's a hedge against inflation as an asset, which was, you can argue a lot of these things, of course.
Yeah.
But the narratives are still here. And the price, I mean, 2 pizzas was 10,000 Bitcoin in 2010, 2011.
Right.
And now 1 Bitcoin is a lot of pizzas.
Right. Yeah. It's a lot of pizza.
It's a lot of pizza.
Yep.
Yeah.
Yeah.
So I call up the store and tell them I want $45,000 worth of pizza.
How you bought the store?